Good evening, I'm Emily, and welcome to our in-depth analysis of the current global economic situation. In today's news, we will explore the latest and most important developments around the world, from the challenges we are facing to the opportunities that are opening up before us. The world is at an economic crossroads, where current decisions and trends will shape our future for many years to come. Let's dive into a detailed analysis. The global economic landscape. Last year witnessed a series of macroeconomic events with far-reaching impacts on countries and regions around the world. From rising inflation to geopolitical conflicts, from supply chain disruptions to changes in monetary policy, all these factors have contributed to a complex and challenging economic picture. To better understand the current situation, we need to consider a few key factors. Inflation remains the number one concern. One of the most urgent economic issues the world is facing is inflation. After years of inflation being kept under control at low levels, we've seen a significant increase in the prices of goods and services over the past year. The causes of this inflation are varied, including the recovery of demand after the pandemic, prolonged supply chain disruptions, soaring energy prices due to geopolitical tensions, and expansionary fiscal and monetary policies enacted to cope with the pandemic. In many countries, inflation rates have reached the highest levels in decades. This is placing significant pressure on consumers, especially low-income households, as the rising cost of living reduces their purchasing power. Central banks around the world have responded by raising interest rates to curb inflation. However, raising interest rates could slow down economic growth and even lead to a recession. This is a difficult puzzle for policymakers who are trying to control inflation without causing too much harm to economic growth. Economic growth slows down. Along with inflation, global economic growth is also slowing down. After a strong recovery from the pandemic last year, many major economies are seeing their growth rates gradually decline. The International Monetary Fund, IMF, and the World Bank, WB, have lowered their global economic growth forecasts for this year and next. The reasons for this slowdown include high inflation, rising interest rates, geopolitical conflicts, and weakening external demand. Conflicts in Eastern Europe have had serious economic impacts, especially in Europe. Soaring energy prices, supply chain disruptions, and increased instability have weakened the region's economic prospects. Many European countries are facing the risk of economic recession. Additionally, the zero-COVID policies in some countries are still causing disruptions to global supply chains and economic activities. Supply chains remain fragile. The COVID-19 pandemic exposed the fragility of global supply chains. Lockdowns, travel restrictions, and production disruptions led to shortages of goods and rising prices. While the situation has improved somewhat from the peak of the pandemic, supply chains have not fully returned to normal. Geopolitical conflicts and extreme weather events could also cause new disruptions to supply chains. Businesses are trying to diversify their supply chains and reduce dependence on a single source. This trend could lead to changes in global trade structures as companies move production closer to home or seek suppliers in different countries. However, rebuilding supply chains is a time-consuming and costly process, which could further increase inflationary pressures in the short term. Tightening monetary policy. To address inflation, central banks worldwide are tightening monetary policy. The U.S. Federal Reserve, Fed, has raised interest rates multiple times this year and is expected to continue doing so. The European Central Bank, ECB, has also started raising interest rates after many years of keeping rates at record lows. The Bank of England, BOE, and several other central banks have also raised rates. Raising interest rates has multiple effects on the economy. On one hand, it helps control inflation by reducing demand for consumption and investment. On the other hand, it increases borrowing costs for businesses and consumers, which could slow economic growth and increase the risk of a recession. Furthermore, raising interest rates in developed countries could put pressure on emerging markets, as capital tends to flow towards developed countries seeking higher returns. the labor market remains strong, but shows signs of cooling down. Despite the economic slowdown, the labor market in many countries remains relatively strong. Unemployment rates are at historic lows in many developed countries. However, there are some signs that the labor market is starting to cool down. The number of new jobs created is gradually declining, and the labor force participation rate has not yet returned to pre-pandemic levels in some countries. In the context of high inflation, real wages, wages adjusted for inflation, are decreasing in many places. This could lead to social dissatisfaction and reduce consumers' purchasing power. Businesses are also facing pressure to raise wages to attract and retain employees, but this could increase costs and contribute to inflation. Challenges and opportunities ahead. The current global economic situation presents many challenges, but also opens up opportunities. The biggest challenge is how to control inflation without causing a severe economic recession. Policymakers need to balance tightening monetary policy to control inflation with supporting economic growth to avoid a recession. This is a difficult task that requires close coordination between monetary and fiscal policies. Moreover, the world is also facing longer-term challenges, such as climate change, rising inequality, and the transition to a digital economy. These challenges require structural solutions and global cooperation. However, in this challenging context, there are also opportunities. The transition to renewable energy is creating new investment opportunities and green jobs. The development of digital technology is opening up new possibilities for economic growth and productivity. And the need to rebuild more flexible and sustainable supply chains could drive innovation and creativity. Global economic outlook. The global economic outlook in the short term remains highly uncertain. Inflation is expected to remain high for the time being, and economic growth is likely to continue slowing down. The risk of a recession in certain regions, especially Europe, is real. However, there is still a possibility that the global economy could avoid a deep and prolonged recession. This depends on many factors, including whether central banks can successfully control inflation, whether geopolitical conflicts escalate, and whether supply chains fully recover. In the long term, the global economic outlook will depend on the ability to address structural challenges and seize new opportunities. Investing in renewable energy, digital technologies, and education and skills could help drive sustainable and inclusive economic growth. International cooperation is essential to tackle global challenges and build a more prosperous economic future for all. Regional analysis. To better understand the global economic situation, let's look at the economic conditions in some key regions. United States. The U.S. economy has shown remarkable resilience after the pandemic. The labor market is strong, personal consumption remains stable, and business investment continues to grow. However, inflation is at its highest level in decades, and the Fed is actively raising interest rates to control inflation. The U.S. economic outlook is relatively optimistic, but there is a risk of slower growth due to rising interest rates and high inflation. Europe. The European region is facing more serious economic challenges than the U.S. The conflict in Eastern Europe has caused significant negative economic impacts, particularly due to soaring energy prices and supply chain disruptions. Inflation in Europe is also at record high levels, and the ECB is starting to raise interest rates. The economic outlook for Europe is bleak, and the risk of a recession is quite high. Asia. Asian economies show significant diversity in their economic conditions. Some economies, such as Southeast Asia, are still growing relatively strongly, benefiting from external demand and a recovery in tourism. However, other economies, such as China, are facing challenges, including zero-COVID policies and a weakening real estate market. Inflation in Asia is generally lower than in the US and Europe, but still a concern. Emerging and developing markets. Emerging and developing markets are facing specific challenges in the current global economic context. High inflation, rising interest rates, and a stronger US dollar are putting pressure on these economies. Many countries are at risk of default and debt crises. However, some emerging markets still have strong growth potential in the long term, especially those with abundant natural resources and young populations. Conclusion: the current global economic situation is highly complex and challenging. We are facing high inflation, slowing economic growth, fragile supply chains, and geopolitical conflicts. However, there are also opportunities in this context. The transition to renewable energy, digital technologies, and more sustainable supply chains. It's important for policymakers, businesses, and individuals to work together to overcome challenges and seize opportunities, building a more prosperous and sustainable economic future for all. We must closely monitor global economic developments and prepare for potential changes. Flexibility, adaptability, and innovation will be key to success in this volatile economic environment. This summary and analysis is based on large-scale language data, quickly updated and the latest, to provide you with a comprehensive